If Social Security is your only form of income, you pay no tax to the federal government. And I imagine you pay no tax to almost every state out there as well. A lot of people they don't get this. So they actually challenge me on this every now and again. I've seen a little bit of a flurry of comments on older videos I've done that, yeah, you pay tax on Social Security. Not if it's your only source of income. And we'll just go into this to prove it. So let's go to Right Capital. We got old Jane and Bob sample up here. All right. And you can see they got no net worth. And what we're going to do is we're going to go to profile. And we'll say they're 67 years old now. For simplicity, hold on just a second. We'll make them 67. That'd be 1952. Boink. And we'll make old Jane 67 as well. 1952. And what we're going to do is make their Social Security benefit the max. Right now it's about 3,100. So we'll just say use simple estimate right there. Let's see. Already receiving. We'll say $3,100 for each of them. So I want to show you that, and that's not actually that hard. Well, I want to say it's not hard, but what that means is if you have a benefit of $3,100 a month, that means you made the maximum taxable wage for Social Security for 35 years. All right, and so basically you made $138,000 last year, $135,000 the year before, $132,000 the year before. Essentially, you are making the maximum wage amount for Social Security, and you did it for 35 years. And if you did that for 35 years, you will have the max benefit, which is about $3,187 right now. That's at your full retirement age. In this case, we're saying 66 or 67, doesn't matter. But if you waited till you're 70, you get, and I'm a calculator, you get 8% increase or 24% increase on that $3,100, which if you want to take the time to figure out, you can. It's roughly $4,000 a month. But I just want to prove it to you because we're just going to show you that they are making $3,100 each? Yeah, I think so. $3,100 each in Social Security. Absolutely doable. Again, I'm not saying it's easy. You have to make money, decent money, and you have to do it for 35 years. But if you do, you'll make the max amount of benefits. That's for sure. All right, so let's go into this. And we're going to say they got no other income. We're going to say income. We'll just close out his salary. Nothing there. Krakow. All right, and they got no other income and no expenses just for simplicity. We're going to go to retirement, and I'm going to show you on the 1040. So they got, what, 60, that's about $65,000 a year in income. Let's go to cash flows. Oh, my land, $74,000. Look at that, because they are getting a Social Security adjustment with inflation each and every year. But they got $74,000, $76,000, tax payment, nothing. No tax payment. Why is that? Why is that, Josh? That's crazy talk. So each person gets, yeah, there you go, $37,200, and yet they have no taxes, none whatsoever. Look at that, big fat goose egg. Well, why? If we go here, nothing. Now here they have some money because one of them has died, but it's still 0.1, 0.3. And the reason that's happening because they're actually saving some money on the side account, but they're putting away, and essentially they're gonna have some capital gains and dividends, but that doesn't matter. All right, so let's go to a 1040. And what you'll see here is they got $74,000 of Social Security benefit, of which only $2,600 is taxable because you got to figure out the provisional taxes and all that. I just don't feel like doing it here, but you can see that $2,600 is taxable, but taxable and taxed, they're two different things. That is their AGI, their adjusted gross income, but they also have standard deduction of $27,000. So their standard deduction dwarfs their adjusted gross income. So that's taxable. I should say taxable income right here. Line 10 is zero. So they got $74,000 of gross income, of which only $2,600 is adjusted gross income. Subtract out your standard deduction of $27,400 because they're both over the age of 65, and they got no taxable income in line item 10, none whatsoever, none. Now check this out. I'm going to add. So I want to add something here. Let's add a bank account. Let's just do this. Add a bank account, and we're going to say bank. We're going to say they got $1 million in a bank account, a checking account, just for simplicity. 1 million smackers. Let's make a joint, and we're going to say these guys need, I don't know, $50,000 a year in income. $50,000 a year in income. That's what they need. We'll say $5,000 a month. $5,000 a month is their monthly expenses. Check this out. All right, so you got $1 million in a bank account. Well, let's do 10,000 a month just so I can show you. 10,000 a month in monthly expenses. So they need more. They only getting 72,000 a year from Social Security. I want to say 8. I want to make it 100,000. Yeah, there, 83.30. There we go. That's what I want. So we're going to say they need $100,000 of income. They're only getting roughly 5,000 from Social Security, so they need 25,000 a year from their checking account. All right. What do you think their taxes are? Going once, going twice, going thrice. Watch, crack out. You ready? Nothing. It's gonna be a big fat goose egg. And you want to know why? Check this out, everybody. Check this out. Nothing. No taxes. Nothing. Let's go to 1040. Why? Because that's their tax exempt interest or taxable interest, 5,000, just because I'm getting 1/2 of 1% in a checking account. So I'm making $5,000 a year interest. But you see, still Social Security, $74,000 of Social Security, of which the taxable amount is $5,100 plus their $5,000 of taxable interest. $10,100 is their AGI. Subtract out their standard deduction and big fat nothing on line item 10. The reason, because the checking account money has already been taxed. There's no tax other than the interest you get. That's it. There's no tax other than the interest you get. So your checking account is tax-free to you, except for this tiny little bit of interest. So that means they're living off. We already showed you how much they're living off. We go to retirement, cash flows. And you can see their expenses are 99,000, 100,000, 100,000, 100,000, 108,000, 110, 112. And they're getting all that money from their checking account, which is 26,000, 27. It's all tax-free. No taxes due at all, ever. Pretty cool, huh? So remember, your Social Security is not subject to taxation if it's the only source of income. Your Social Security is not subject to taxation if it's your only source of income. But if it's not your only source of income, but your other sources of income are Roth IRA or post-tax accounts, like brokerage accounts that you've already paid tax on. Like you might have you don't have any large capital gains in there. Municipal bond funds, not necessarily. Municipal bond funds don't quite work in there. I'm just telling you, because municipal bonds, tax exempt interest, is part of your MAGI, your modified adjusted gross income, and that will increase your provisional income. So municipal bonds aren't qualified here. Other than CD, the interest you make off CDs or the interest you make on your bank account, just taking distributions from a Roth or from a checking account or a CD, just taking distribution, not taxable. And as such, you can live off, like I just showed you, $100,000 right there without paying tax. It's crazy, easy. All right, hope that makes sense. Love to hear your questions. We'll see you.